She didn't do anything wrong. She just never asked one question for 5 years in a row. Quick note before we get into it. I'm an AI avatar of Askia Roberts, a licensed CPA. Every word here was written and approved by the real me. This episode walks through a composite case. Not one real client, but a pattern I see all the time. A practice owner running the exact same business structure since day one, never revisiting it as the business grew. I'm going to show you what that habit actually costs, what the real math typically looks like, and just as important, when this doesn't apply to you at all. Here's the misconception that once you set up your business, LLC, sole proprietorship, whatever you started with, you're done thinking about it. Set it up once, file the same way every year, move on. The LLC part is usually fine. It's a solid legal structure for a lot of practices. What quietly goes stale is the tax treatment underneath it. The IRS lets an LLC choose how it wants to be taxed, and that choice isn't a one-time decision that ages well automatically on its own. As revenue grows, the math behind that original choice can shift, sometimes significantly. And if nobody's rechecking it, you can end up running the exact same default setup at profit levels several times higher than when you first set it up, without ever revisiting whether that default still fits. Here's the mechanism. A default LLC or sole proprietorship pays self-employment tax on the entire net profit every year, no matter how large the business gets. An S-corp election changes that by splitting income into two pieces: a reasonable salary, which gets payroll tax, and a distribution, which generally isn't hit with self-employment tax the same way. That salary has to be genuinely reasonable for the work being done. This isn't a loophole to zero out payroll tax, but the distribution piece is where the structure starts to pay for itself. The catch: this split only works in your favor once profit clears a certain threshold, because the election adds its own payroll and compliance costs. Below that threshold, the default setup can actually be cheaper. That's the whole mechanism, and it's exactly the kind of thing that needs rechecking as profit moves. Now, the numbers, and I want to be precise about what these are. An illustrative range for a composite case, not a promise about your business, since your actual numbers depend on your profit, your industry, and your specific structure. In this composite scenario, a practice netting somewhere between $150,000 and $200,000 a year, running as a straight LLC the whole time, typically left something like $6,000 to $9,000 a year on the table by skipping the S-corp election and a reasonable salary split. Carry that gap across 5 years unflagged, and it can compound into a range around $30,000 to $45,000 total, which is where a number like $40,000 over 5 years comes from in a case like this one. Different business, different number. The pattern, a yearly gap nobody catches, is what stays the same. Here's the caveat, and it matters as much as the math. This doesn't apply to every business, and it's not automatically the right move just because you've been an LLC for a while. If your net profit is on the lower end, commonly cited thresholds start somewhere in the $40,000 to $60,000 range, though it varies. The added cost of payroll processing, a separate corporate return, and the compliance work to support a reasonable salary can eat up most or all of the benefit. In that range, staying with the default structure can genuinely be the smarter, simpler choice. This also isn't something to change based on a video. It requires someone actually running your numbers, because the wrong salary figure or a premature switch can create its own problems. The point isn't everyone should do this. It's everyone should actually check. This plays out differently depending on what you run. A healthcare practice, a trades or contracting business, and a professional services firm each hit these thresholds differently, and the fix looks different for each one. The link in the description goes to the right one for you. Just tell us what you run. That practice owner from the beginning wasn't in trouble, and she hadn't lost that money forever. She just never had anyone actually run the numbers on her specific business year after year. Once she finally did, the fix wasn't complicated. It just needed the right person looking at the right numbers on purpose instead of by accident. Nothing about her business changed that day, just whether anyone had checked. You need about 15 minutes in the right numbers for your specific business. That's what's waiting behind the link below.